Weekly Trades family. Hope everybody's doing well. Let's have a quick review. So we had another down day yesterday. In fact, we've had 2 down days. I'll go ahead and switch it up to a 3-minute so we can see everything. All right. So looking at the last 2 days. We'll start with Monday, where we were on a downtrend going into open. We barely fought above our MA cloud and then rejected down. Fought back a little bit above it to hit VWAP and then rejected down, hit that MA cloud, and just kept going down. Point being, this MA cloud is meant to help us understand what the current trend is and where we want to get in for a continuation of that trend. Every time we tested the cloud, we would reject and head lower. That same trend carried into yesterday. Yesterday. Where we were on a little downtrend into open. We barely peaked above our MA clouds to hit VWAP and then rejected down. Caught one little bounce at this squeeze bottom in our purple hash line for your last chance to load up, rejecting the cloud and heading lower. And then yesterday just kept rejecting cloud and heading lower until the end of day. So we've had 2 days of that pattern. The question is, will today be different? And we definitely want to use our MA cloud to understand the trend and where we could be going. As you can see, we were rejecting it pre-market and almost made it down to our outer shaded region. We made it below yesterday's low, which was right here at this red line on our tool. That red line is always the low of day. So we were low of day was around 39.21-ish. We set new lows below that, but now we are right back above and trying to push through that 39.30. So it looks like looks like buyers might have been woken up after getting down to these levels, and we might have a little change of trend today, potentially. We want to watch our MA cloud going into open. We still got an hour left, but we have made the push for it to start to turn green and supportive. It's just now starting to flip. So obviously we want to see if we can stay up here going into going into open, sorry. Overall, 3,900 is the big key target we need to hold today. If we do slip back under this cloud and go down to test our pre-market low, if we start to lose that, 3,900 is the big key level to hold today. And on SPY, it's 390. We're on a nice little bounce here. Let's hope we can flip these clouds. And then when we get into the cash session, want to see a dip to the clouds and hold for a chance to load long. We have plenty of ground to recover to the upside. And our trend line from high of year has slowly come down under 4,100. We tapped 4,100 on Friday, and we tapped that trend line. And then we've had our, pretty much right there. Almost tapped that trend line in 4,100 on Friday, and then started this slip back. We have engulfed the Powell pop from last week that sent us higher, and that the bottom of last week was around 39.41. So 39.41, the big key resistance. We need to get above 39.41 to try to push higher. Let me go ahead and switch this up to our normal prep study set. Ooh, quick loads today. Let's go. And just in a quick review, on Monday, called out the 402 put that hit Beast, started to bounce up on that data drop that we had on Monday, made its way back to Beast, and those went from our 37-cent Beast bottom, and we had buy orders at 40 cents. Those got up to about 370, so about a 10x on those 402 puts Monday. And if we look yesterday, called out the 396 put at open. It is a little hard to see unless I zoom in here. But we closed right above Beast. We opened right in Beast. I actually called these out before the market opened yesterday. I said keep an eye on those 396 puts. Since we opened flat yesterday, those had a great chance of opening down in Beast. That's exactly what we got. They opened at 26 cents. They reached down and almost tapped Beast. They actually held the previous day's open at 20 cents. We got some buy orders there at 20 cents, 24 cents. And that's when I was calling out. Basically in the first 10 minutes, I said, before market open, watch this 396. And then in the first 10 minutes, I said 396 is holding 20 cents. It's a great candidate if we start to drop. Those immediately shot from, whoa, where are we? Those immediately shot from 20 cents up to 60 cents for a triple. Pulled back to about 35 cents and then kept going. Ultimately, from our Beast zone, those made it up to our take profit levels and then kept going from that 20 cents for a 10x and actually a 20x because they made it to 40. So even if you got it on that little pullback where it got down near 40 cents, those went for a 10x. And for the most part, on a 1 minute and a 3 minute, they were holding their trail line pretty much the whole day, allowing you to stay in the trade. Basically, you get in at 20 cents, it starts to work out and gets, up near $1.50. You can move your stop up to our purple hash line just below $1, well over 4x from the Beast entry. And then as it starts to progress higher, you move your stop up, and as it keeps going higher, you move your stop up, and that's how you stay in the trade. And even, if you missed the entry at the beginning of the day, throughout the day, I called out other strikes like the 393. There you go. That 393, we called out the 396. It started to get going and take off. That 393, I said keep an eye on its Beast level at about 20 cents. And at that 30 cent level we had as well. Those went 20 cents up to 50 cents, pulled back to 20 cents again. And 30 cents, that's where I was calling those out midday. And those took off to $1 and $1.50 from that 20-30 cent entry. So as the day progressed and we just kept heading lower, still was calling out different strikes that were providing opportunity from 20-30 cents up to $1, $1.50. And all that was we were under our MA cloud, and every time we got to it, I said, hey, check out this 39.30. It's hitting a buy zone. Right as we're testing our MA cloud, we get a rejection of the MA cloud, and those puts continue higher. Let's see. Let's get back to our prep to see where we're going. And before we dig too far into that, let's pull up our economic calendar. It's pretty light this week. We don't have much going on. Today we've already had our data drop at 8:30. with a little bit of jobs data. At 3 p.m. we have consumer credit. Tomorrow we have our initial jobless claims, and Friday we have some producer price index, PPI, and University of Michigan data, and some wholesale inventory data. And then a little bit of housing data at noon. But overall, pretty light this week. The big one next week is FOMC. So, after two strong down days, the question is, can we start to get going to the upside? Basically, every attempt to bounce the last 2 days was immediately pushed lower, but we have arrived back at big key targets. 3922, 3900, the big key area of support. Well, it's been a couple of weeks now, but let me go ahead and jump to a slightly higher time frame. Pretty much after this CPI push that sent us up, and we held around 3922 to head higher, and then held around that 3941. Since pretty much that CPI push, I've said, hey, 3922, 3900 is our big key support. As long as we keep holding that, we can head higher and keep setting higher lows. We can keep heading higher. Now we're back at that 3922, 3900. This is our CPI bounce, and that's where we settled before heading higher. We need to hold that 3900, 3922 to continue to push higher. We've made it back below our daily 21. We start to lose this 3900. Our last stop, excuse me, is this CPI gap, right? Kind of marked where we were and then where we opened and pushed further. If we start to lose that 3900, that 3878 is the beginning of that CPI gap, and slipping below that, we're talking about getting back to the daily 50, maybe even to the bottom of that CPI gap. But overall, if we can hold up at 3900, 3922, and if buyers can step in and get us through our trend line from highs of this pullback, this downtrend, then we have again said we are okay with this bottom of 3900, 3922 to try to head higher. Looks like we have a daily squeeze that's starting to form again around us. Just getting started. The bottom of that daily squeeze, where are you? Looks like the bottom might not be in just yet. But overall, today, looking for 3900, 3922 to hold. If we could even just hold pre-market low and get back above 3922 on any dip, that's still showing bullish, and that buyers are trying to step in to defend this zone. Obviously, we need to get back above 3941, get back above this trend line and the daily 21, which is now pretty much overlapping our 3961. So, for scenarios today, would love to see maybe a dip down to this 3922 or pre-market low and a hold there, and then start to pop back up to test our levels above in this trend line. Hold on, give me 1 second. Sorry, I've got a phone call that's coming in. Make it quick. All right, sorry about that. I'm so sorry. Still muted. All right, let me back up there. Can you guys hear me now? Sorry, I thought I was unmuted. I thought it looked like the sound was moving on this end at least. But let me verify that you folks can hear me now before I continue further. Okay, good. Just making sure. So, just talking about some likely scenarios. We could continue with this slight bounce, get up to this 39.41, start to reject back down to test 39.22 or pre-market lows, hold, get back above 39.22, get to support, go to that 39.41 and that trend line, and then start to push higher to the daily 21 for a recovery kind of day. Scenario 2, we could reject that 39.41 or VWAP, start to head back down to test pre-market low and ultimately reject 39.22, take out pre-market low, head down to 3900. If we slip below that and reject, then going down to that 39.78 and that gap fill top for a test. So we got our up scenario, our down scenario, and we could also have something that looks a little bit like this, where we start to reject and get down to 3900, but ultimately hold. Start to get back above 39.22 going into the end of the day to give the look like we want to head higher going into Thursday. So just some likely scenarios that could unfold. One where we look a little strong, buyers step in, get us back over key levels in that daily 21. If we don't have buyers stepping in, we'll come back to test pre-market lows. And if we start rejecting and taking out, then we're heading lower. So yeah, I'll start to do this more and more to try to help us visualize how this could unfold and turn into one scenario or the next, right? So that's it for ES. Let's go on to NQ. So in Q, it's all about 11,500 and this daily 50 MA, which sits kind of near 11,400. So just like on ES with that 3922, 3900, want to see us hold this zone from the daily 50 up to 11,500. And if we can get going to the upside, looking to get back to our daily moving averages above, near this 650 up to 750. Getting back there starts to engulf yesterday and gives us the sign that we can head back up to this 12,000. If we start to lose that daily 50 and that 11,400 and this first Keltner to the downside, right, this is our little zone of support. But if we start to break down below this and reject it, then we're coming back to this 11,200 and the bottom of this daily squeeze, which is just starting to form. Around 11th, well, right in the middle of our zone here, around 11,100. So if we keep rejecting 500, can't hold this daily 50 and this Keltner, get below and reject, this is our zone below to target. Oh, don't start freezing on me. Oh, come on, toss. Everything will be going good, and then there we go. Looking at that CPI gap, kind of the same thing, right around 11,300 is where that gap starts. From where we closed to where we opened after CPI. So we do have that level as a little potential bounce point before we get back to this 11,200 and 11,000. But overall, let's see if we can hold. You can see on that CPI day, we pushed up, we muddled around midday and then pushed for more. We're pretty much at that point that we reached on the first pop. So let's see if we can hold some of those CPI levels and this daily 50 and push back up to the daily 21. On Ruddy. Ruddy definitely gotten beat up the last 2 days. It's, kind of been leading to the downside as far as when the day starts. Yesterday YM was catching some nice bounces in Q. Ruddy just dropped and kept dropping. You can see on Monday, first 30-minute candle straight down. Yesterday, first 30-minute candle straight down and through the previous day's lows. So Ruddy's been a good gauge overall. We've pulled down near this 1800 and near that daily 50. We have a daily squeeze. Yeah, daily squeeze. Jeez. Just below, so we have a number of things to support us. If we do slip through yesterday's low and pre-market lows, actually it looks like Ruddy did not set a new low below pre-market lows, so that's a good sign for the upside on Ruddy. And very simply, if you have the handy dandy trend tool, which I share for free in our room, we've got our yesterday's low set around that 1803. We've got our pre-market highs around that 1818. So the range is set, and we should play that range until it breaks. If we can get above that 1818, 1820, turn it into support, then we can try to fight back to the daily 21 and recapture yesterday. But if we can't get through that 1820, pre-market highs, squeeze top, then we'll come back to retest the lows around that 1803, 1800, and that daily 50. And we could even just make a little slip down to this daily squeeze bottom, then get back above and take off from there. So just a couple of scenarios to keep an eye on. Watch that range. and play the range till it breaks. And ready might be kind of the first indicator. If it can get above that 1820 and hold and try to push higher, could be our first signs that buyers are stepping in. They beat up small caps the last 2 days. I'd say a little bit harder than the others. So let's see if they start to rotate back into it as our first indications that buyers are returning. And technically, the last 2 days have been a little bit lower volume. I'm not going to load up the study, but basically I do have a study that gives daily volume for the last few days. And SPY for the last 2 days has been declining in volume. So let's see if volume and buyers return today. And overall, we have been in a nice up pattern for the last couple of weeks. We've gotten above our MAs, and now we've pulled back to the daily 21, the mean. In a way, that's just resetting before trying to head higher. It can also be giving out and heading back to something like daily 200s or daily 50s or what have you. So on YM, definitely want to see yesterday's lows hold. We basically got a zone of support from that 33,450 up to 33,500, big key psych level. You can see we got near there, and now we're bouncing up to the daily mean. We've got our range set, pre-market lows, yesterday's lows, and pre-market lows, and overnight highs. So play this range until it breaks. If we can get back above that 33,700, turn it into support. Looking to get back to daily 8 and daily 15 back at 34,000. But if we reject pre-market highs, or this little squeeze top that's starting to form, and or if we can't get above the daily 21 and use it as support and just keep rejecting, I'm going to roll back to test these lows. Should they start to give out, let's see, we've got these recent lows around 33,200, and then that psych level of 33,000 below. That daily squeeze now starting to form right near our key level of 32,900. So let's see if we can hold up above this. We're basically arriving back near CPI just like everything else. So keep an eye on yesterday's low. If we start to get below that and reject, then we could likely be coming back to test this low and kind of where we gapped up on CPI, all around that 33,200. And Johnny, basically we do have an H that is starting to form, but it has to complete and take out the low. Otherwise, it could turn into a W, especially if it takes out the neckline of that W at that pre-market high. So basically, yesterday's low could be an accelerator down, pre-market high could be an accelerator up. Those are the levels you want to keep an eye on. Apple definitely got beat up from 150 on Monday, now down near 140. You can see we are also near the lows from last week at about that 140 and a half, we can call it. It's basically where we bounced pre-market. Need to hold there. Otherwise, we're coming back to test our zone around 138, 138.8. And should that give out back to 136, basically kind of where we took off from on the CPI. But if we can hold around this 140 and a half, could be setting in a bit of a W. Or we are gapping below yesterday's lows. So big key on Apple is to get back above yesterday's lows near 142. Use that as support to try to get back to 144.5, 145 on any kind of recovery. And if we start to take out those pre-market lows, then target that 138 zone below. And it looks like that daily squeeze is starting to form just below that 138. A little bit of a sliver of it. AMD. Oh man, it's a little late. I need to accelerate through this. AMD back below the daily 21. If we slip below pre-market lows, target that 68 and then 65.5, 66 where the daily 50 is. But if we can hold yesterday's low and pre-market low, looking for it to get back above 70 psych level and try to recover back to this 72.3, which was kind of the base that we were holding. And that daily 21 sitting there as well. Amazon. Got very beat up yesterday, gave out that 91 that it was using as support, making it down to that next Keltner around 88. So let's see if 88 and pre-market lows at about 87.5 can provide support for us to, or for Amazon to try to move back to 90, 91 for a little recovery. If we start to lose pre-market lows, I'd be targeting that 86 down near this daily squeeze bottom. BA. Let's see, came back a little yesterday. Close to where we were trying to hold last week before that little pre-market gap down on Friday. So basically, let's see if we can hold 175 today if there's a little dip. But if we can hold pre-market lows, which are above that 175, and can keep going up, looking to get back to that 180, these recent highs. If we can get above that 180 and turn it into support to push off of it back to 185-ish at the top of this daily squeeze, which is starting to form. If we start to lose that pre-market low, maybe targeting that 172 where the daily 21 sits, 169.2, my next big key level that we bounced off of, and 170 psych level to the downside. Cat. Ooh, so Cat has finally arrived back at a good spot. I've been talking about if it could get back to, it'd be a good spot to go long. You can see off of this 224, we pushed up hard. Off of this 225, we pushed up hard. Now we're getting back to that 225, 226 in the bottom of this daily squeeze. If we can hold here and start to break back above 228, we could accelerate through that daily 21 and 230 to try to get back up to this consolidation around our daily 8 and daily 15. But if the 230, that daily 21 at 229, or this 228 keep providing resistance, we could slip down to fully hit that 225 cash session, and this first Keltner down around 223 and some change. Google. Overall, Google's not been getting beat up quite so bad. You know, made it up to 101 and being pulled back with the market, but arriving at this 96 key zone. If we can hold 96, get back above this daily 50 and daily 21, use it as support at this 97, then looking to get back up to 99, 100 off of a bounce at this zone. If we start to lose that 96, we'll probably start a slow grind down to 95. As you can see, when we get in this zone, they tend to slow down, they're loading up, and then you get a big move, right? GS. Bank's been getting beat up, but they were leading for quite a while. They got above third Keltner, Now back below the daily mean and close to that second Keltner, kind of in between the two. Let's see if this psych level of 360 can hold, and yesterday's lows. If we start to lose that, probably heading back to 356, 355, near that second Keltner, third Keltner down near 350. If we can hold 360 and start to move back up, targeting 365, and then 370, 372, where the daily 21 sits. Meta. Meta made it back to the daily 21 and this 114 key level. Little gap down. Let's see if we can hold 112 and pre-market low. If we can get back above 113.5, turn it into support. Looking to get through this daily 21, back to the daily 50 up here at 118. We have that daily 8 at 116. So let's see if we can find our feet. We are testing some of those recent highs. So let's see if we can hold that 212, get back above 214 and push to hold that 112, get back above a 114 and push to 116, 118. If we start to lose that 112, coming back to this 109 where we tried to set in a base. Microsoft. Unit 240, 241, key area of support. We are pretty much arriving back there. Let's see if Microsoft can quickly get back above this daily 21 at 244 and start to push higher if it can, targeting 248, 250 to try to fight back to. But if we keep rejecting this 244, likely coming down to test pre-market lows around 242, and then if we keep slipping back to these recent lows around we have a zone around 240, 241. If we lose that, down to 238 where that daily 50 sits, and these recent lows that it's caught up to at 238. Netflix made this push up to 322, getting to 333 completely fills the gap from a couple of earnings ago. We pulled back to that daily 8, and yesterday did a really good job trying to hold that daily 8 at about 305 and this key level of 307. Now we are gapping down slightly, but we're trying to get back above yesterday's lows. Ultimately, let's see if we can hold above to pre-market lows and this 300 level. Start to push back above 307, start the journey back to 315, 320. If we keep rejecting 305, 307, then we're coming to hit that 300. And if that gives out down to 293.5-ish where that daily 21 sits. NVIDIA. Made it back to the daily 21, trying to hold. So let's see if this 157 can, and this daily 21, can start to bounce it back up with the goal of getting back to 160, 163.5 where that daily 8 sits, 165, on the goal to 170. But if we start to lose the daily 21 and reject it, could be heading back to these recent lows around 150, also kind of where we popped on CPI, and should 150 give out 147.27 my next key level. QQQ. Let's see if we can hold pre-market lows and this 280 that it's fought back above before open. If we can hold, looking to get through 282, 282.5 pre-market highs to get back to 285 and our daily 21 above. But if we can't get through, say 282, and we start to lose 280, coming to test pre-market lows near 278.5, that daily 50 is at 277 as a target to the downside. And below that 277, 275, 272 and a half. If we do keep slipping. But let's see if we can find support near this 280. If we take a dip, we want to see us hold this daily 50 and then get back above the daily, or hold this daily 50, get back above 280 for us to, maintain some bullish sentiment. Otherwise, we are losing the daily 50 and likely going to try to recapture some of CPI. SPX. So yesterday opened flat, pretty much no gap to fill. We did leave a little gap behind here. That's still way above. Dealing with a little gap down. So going to be opening in between yesterday's lows and where we closed. Let's see if yesterday's lows can hold us up on SPX. Let's see if the little gap down provides us a pop to fill the gap, and maybe that pop continues. If we can get going above 39.41 on SPX, we're going to get back to the mean at 39.60, and then maybe retrace back to 4,000 where our daily 15 and 8 are sitting. If we start to lose those pre-market lows, coming down to test 3,900, and we do have this gap from CPI. So if we start to lose yesterday's lows, coming to test 3,900, if we start to lose that, the target would be kind of to this 39.60 where we open from that CPI gap. And obviously breaking into that would be trying to fill that gap, and we have our daily 50 sitting right in there as well. SPY. Yep, all about 390. Let's see if we can hold our pre-market lows at about that 391, 391 and a half, yesterday's lows, close, right? Let's see if we can hold that zone if we have a little dip, and if we can continue to the upside. Looking to get back to 395. 398, Monday's low. All on the goal to get back to 400 and our daily 8 above. We do have that daily 21 right around 395 and a half. If we can't get through pre-market highs and we roll back, going to test yesterday's low and pre-market low, should that start to give out, we have to see how this 390 test goes. 390 is a huge level for SPY. As long as we can continue to stay above that, there's a good thesis for some rally into the end of the year. We start to lose 390. The probability of that rally gets less and less, and we're falling back into, where we've been in the past. That daily 50 sitting way down at 381. So pretty critical that we hold 390. Let's see if we can get back above the daily 21 and try to recover. And as our trend tool shows us, play this range until it breaks. I'll be attempting longs off of the lows. If we have a dip and we hold, and I see the confirmation of a good hold, I'll be trying long. If we get up here and start to reject repeatedly, I'll be trying short. Play the range until it breaks. Tesla. Coming back near 175. Let's see. If you look left, in this same kind of CPI where we took off from 175, we did get below, and now we're back to it, kind of making an inverse head and shoulders. Let's see if that 175 can hold, push us back to 180. If we can get above 180 and hold, back to our moving averages above. We start to lose that 175, we're kind of losing that neckline, and we'll probably come to retest this zone below That bounced us at 166, 167.5 at the bottom of that daily squeeze. UVXY. A little bit of a breakout yesterday, right? Even though Monday we did have a down day, it still stayed in this channel. Yesterday starting to break out, but only made it as far as the lows of this consolidation. So, for upside today, looking for us to stay below pre-market highs on UVXY at the top of the squeeze. So basically looking to reject that 790, 775, start to make our way back down below 7.5, and back down into this range near 7.25 and 7. That's for upside in the market. If we're going to continue to slip and go through 3,900, we'll likely see UVXY continue up through pre-market high, get back to this $8, and try to push through to that daily 21 at 8.4. VIX. Also with a little bit of a breakout and getting back to the daily 21 yesterday, and pushed a little more pre-market. So currently above the daily 21 at that 22.5. For upside in the market today, I want to see VIX get back below 22.5, reject it, and start to head back to 22, and these daily moving averages below. That's for upside in the market today. For further downside, we'll likely see VIX hold around this 22.5, start to bounce up to pre-market highs around 23, and try to get back to this 23.3, 23.5 up above. So if we are going to go down to test maybe the CPI gap, right, then we'll likely see VIX come back or come further up to test this 23.5. But if we can get back below 22.5 and head back to our moving averages, we could see a nice relief bounce today. That's it for prep. Sorry we ran a little late. Good luck today, everybody, and we will see you in the chat.